Hello guys, welcome back to another lovely trading video. Before this we did upload a overall market insight that's using SPY and QQQ on how to find good profit targets and just overall analysis on where we can see the kind of overall market going. So we're going to upload another one just using Roblox because it is down around 6% today. And so we can just kind of see where do we think this is going to bounce, where do we think it's just going to go in the near future, and how you can maybe trade it if you want to trade it a bit how I personally would. So firstly, looking at Roblox and take into account this is being recorded at 2 PM market time, so the market hasn't yet closed, so this may be a bit different to when it's uploaded, but I'll be going out so I can't record it when market's closed. So firstly, we're right now around $73. We will be looking at a kind of key buy area right now off the bat at around $70. So kind of 70.16 all the way down to 76 cents. This will be our key buying zone. Why do I say that? It's the second deviation on both the daily and the 4 hour. So that does provide us a low risk buying opportunity, and you'll see you should be seeing basically the same reaction as it did when it came into the first deviation. So you'll see here Roblox came into the first deviation, bounced off. Usually see it come in to try and touch the next deviation, in this case statistical mean, and then obviously it can continue up or may then continue down, and in this case pulls down, and then you see you get the pullback and retest before breaking down further. And so all you need to be looking at, you can take that as a prime example of what we would be looking at on Roblox. So we would be looking to get long around $70. Where would we have our profit target? Our kind of key profit target would be around $77 and say 50 cents or $78, just around that target. So how would we be looking to trade that? When it pulls back, I personally kind of just get long when it comes into this level. I don't tend to wait for too much confirmation. What I tend to do is get in with not full size, and if it continues down, obviously stop out. Otherwise, if it starts to show strength, I may then add in some size. But usually the reason I tend to buy, say, blindly at that level is it doesn't tend to fail me much. These levels are used by retail traders, banks, institutions, hedge funds, kind of really anything, because it's something more algorithms look at, and that's why you tend to see, if you go back, it is very effective, and why a lot of volume tends to come in on tends to come into the stock exactly at these deviation levels. So that's why I tend to buy more blindly off them. Or I say blindly, just meaning I'm not looking for any other factors to really buy, unless there is obviously a big news article out which may affect it. So maybe like Facebook, Facebook for example right now, quickly pull up the chart just so you kind of get some insight. Obviously right now they have the whistleblower news. Their services were down yesterday. I think Instagram, which is owned by Facebook, is having some more issues today, and so yes, these may not be long-term effects, but people tend to overreact. You'll see that all the time in the market. So when I see kind of big news like that, it doesn't really tend to be something I want to trade, because it's not going to be as accurate. And as you'll be able to see here with Facebook, kind of came into this deviation. You got a bounce, but not anything we would really trade, and probably would have been a trade we would have lost money on, because it didn't even reach that half deviation, so we probably wouldn't have looked in any profits. And then you can see it's kind of now continued down, and that's why I say when there's large news surrounding it, it tends to be a better idea just to stay away from it. There will be another opportunity on another stock on that exact same day. So you don't need to force a trade on, let's say, a Facebook just because the name's better known. It's just a lot more risk for, again, not a guaranteed or not as increased chance of a return. So there's no point taking a worse risk to reward for really no reason. So basically on Roblox, our key buy area is $70. What are we looking to happen? We're looking for that bounce to begin here, and we would be looking for that $77 target. And then again, you can try maybe hold it some more. Maybe you lock in some profits at the 77 and then try and hold on some for the rest. I personally tend to just lock them all in there so I can just get into the next opportunity. Because from there it will start to move a bit slower, just because there won't be as much buying pressure coming in when it comes into more of a fair price. So yeah, when it comes back in or comes into our buy zone, we would most likely see a bounce up to the 77. Then that's personally where I'd be getting out. What you then may see is they may continue down, break down, and maybe even break down below $70 and push to the next deviation, maybe all the way down to $62. And again, if it does that, then we would be looking to get long at around $62. But what could also happen is we come into the 70 and you just continue falling. I mean, you're never guaranteed a bounce at those levels. And if it does, how I tend to somewhat look at an area to maybe stop out is that where am I going to be locking in profits? Okay, I'm looking to make around $7.50 on this trade, and then I may divide that by 2 or maybe even 3 to find my stop loss. So in this case, you could literally say, okay, I'm going to have a stop at, say, obviously you could use a calculator to get a more accurate price, but you could say around $3. If it goes against me $3, then it's most likely not going to work, and I'd rather get out of it. And if you are using this, I would always say just go below the whole dollar. So in this case, let's say we had our stop at $67. Don't put it on $67 because even if it's going to bounce, if it pulls back those $3, you have a high likelihood that it could bounce off that 67. So usually a good rule of thumb is just go maybe 10-15 cents below. So 66.90 or 66.85 would be ideal. So that's how I personally would use the stop side of it. And then yeah, that is really, I guess, the overall thing you would be looking for is come into this area. It will either and I personally just buy. If it continues down, you have a stop. You should always have a stop in place so you know what your max risk is. And then if it stops you out, you get stopped out. It's a losing trade. However, if what would hopefully happen and kind of more likely to happen is you get that bounce, you just be patient, wait for it to come into your profit target, you lock in profits there. And you could also be someone, depending on if you're maybe a bit more happy to take the risk, is you could short when it comes into this deviation, as you do tend to see that you do get a pullback. Even if in this case, like this case, you kind of continue down further, may not always happen, but if you want to get a short-term swing, maybe to a half deviation, would provide some good trading opportunities. So that's kind of the main insight on Roblox, how I personally be looking at it. So I hope you enjoyed the video, I hope you see you in the next one, and that's it. Peace.